Hi, I'm Brendan Casey, General Manager Investments with Rest. Welcome to our quarterly investment update. The standout feature of the March quarter was the resurgence of share market volatility around the world, coming after a long and unprecedented period of market calm. So what drove these ups and downs? One reason is a strong jobs outlook in the United States. This usually means higher wages, so inflation and rising interest rates once again become a concern for investors. This concern saw the US Dow Jones Industrial Index witness one of its biggest single-day points losses in history, down almost 1,200 points on February the 5th. Another factor is government policy. For example, tax reform in the US provided a boost to global markets, but it was short-lived, thanks to a later decision to impose significant tariffs on Chinese imports, sparking talk of trade wars. Markets responding to good news about global growth also added to this volatility. The International Monetary Fund yet again raised its forecast for world growth, adding another 0.2% to its outlook. This is the fastest rate of global growth since 2011 and the bounce back from the global financial crisis. These ups and downs in investment markets have impacted super funds' investment returns in recent months. This is despite an overall positive performance by international shares, which were the main contributor to Rest's recent investment returns. For the March 2018 quarter, our core strategy returned 0.4%, although still a healthy 8.6% for the past 12 months for our super members. For our Rest pension members, the default balance option returned 0.2% for the quarter and 7.4% over the past year. With volatility making a comeback on the world stage, now is a good time to be thinking about risk. So far this year, we've seen plenty of surprises. And with the prospect of trade wars and other tensions between some of the world's biggest economies, it's not unrealistic to expect more surprises ahead. At Rest, we see these risks on the horizon as a good reason to keep our relatively defensive investment positions in place. Right now, around 13% of the core strategy is in cash, with around 43% in Australian and overseas shares. About 9% of our fund is invested in direct property, a growth asset class that offers less day-to-day volatility with returns that aren't directly correlated to share markets. So I'm excited to share with you news of our most recent property acquisition, a 1/3 stake in the iconic AMP Centre Tower near Sydney's Circular Quay. This premium-grade property is being redeveloped as part of a new shopping and residential precinct and offers the potential for capital gains and stable investment income. It's another example of how Rest is continuing to deliver competitive net returns to our members over the long term. So thanks for joining us for this quarter's investment update. I look forward to catching up with you again and sharing more insights about your super next time.